Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we specialize in investment real estate in the Oklahoma City and Tulsa market. It is the 17th of February, so we are well into the year now. And we have the new administration doing a lot of things, and we have the new inflation report that's out. Now, in December, inflation was 2.7%. But in January, where we were hoping it would go lower, it actually went up. It went up to 3%. The two biggest problems in the inflation report is number one, food. Give you an example. Yesterday I went in and bought my favorite eggs that a year ago were $5.75 to $6. They're cage-free eggs. Yesterday I paid $10.15. That's a problem. That is inflation, and that's not the only thing that went up in terms of food. The other thing that went up a lot, and this is getting crazy, is housing. Housing, which is my industry, is going nuts, even with these rates. You know, previous to COVID, and I've said this many times before, we were at $282,000 in terms of the median price of a home in the United States. Now we're into the 460s, and the possibility by the end of the year of going to around $500,000 for the median price of the home. This is a huge problem, and what it's doing, it's closing off a lot of markets. Now, the other things that can happen is we have about 4.8% of our workforce in the United States are illegal. In fact, in housing, it's even greater. So, depending on what happens in terms of the deportations, that can be inflationary because we won't have the workers to finish the homes, makes homes more expensive, takes longer to build. So, we have these inflation problems that are staring us right into the face, and what this means is rates aren't going down anytime too soon. In fact, you know, if you look at these numbers, if you look at the tariffs, rates could actually go up, and that can be a real problem, especially with these prices. Now, the brilliance of the Oklahoma City and the Tulsa market is we can start a little bit over $200,000 for the price of a new home that you can buy, which is fantastic. So affordability is going to be more and more important. Now, the other thing is, if you want a higher quality property and you want a 1,200 square foot house that has all the bells and whistles, the granite, the stainless steel appliances, the luxury vinyl plank, the tankless hot water systems, the sprinkler systems, everything you can put into that house, it's going to be with fence blinds and garage door opener about $295,000. So quality homes cost a lot. Now the cool thing is we have duplexes, and duplexes have all of these bells and whistles. Everything I just described, plus the same square footage, 3-bed, 2-bath, 2-car garage, just like the single family. But half duplex is $205,000. The full duplex is $410,000. That means there's a $90,000 difference. And in affordability, this is huge. This is why we are pushing duplexes like crazy, because on the exit strategy, if you're taking $90,000 difference, yeah, that single family house is nice, a little bit more privacy, but we divide the legals, A and B, so you have your half duplex, you have your fence, you have your private yard for $90,000 less. So duplexes for investors is an absolutely winner at this point. Positive cash flow, fantastic exit strategy. This is going to be the future of real estate. In fact, because of these prices, I believe it's not the future. Duplexes are now.